Hello everyone, you are watching Saheb Academy. If you like our videos, then please subscribe to our channel and also hit the bell icon for the regular updates, and also follow us on Instagram, Saheb Academy. Now let's go to the video.
Hi everyone, welcome back to the second video of contract costing chapter. Now in this video we are going to solve this simple problem of contract costing just to start off the chapter. And before that, let me just tell you what we have done so far. In the previous video we have discussed the basic concept of contract costing. Yes, who is contractor, who is contractee, what is meant by contract, and then we are talking about construction contracts over here. Yes, and I also told you that we do this chapter from the contractor's point of view. Yeah, we have to prepare the contract account for each of the contract that the contractor takes. Yeah, and then what this contract account is prepared in whose books? In the books of contractor. Yeah, and we also saw the format of contract account in very much detail, and we discussed each and every item over here. Yeah, in very much detail. See here, for the materials we took this slide to understand properly the materials, sale of materials, abnormal loss of material, and with the plant also. Yeah, how you have to take the plant. There are two options: either take opening balance and closing balance, or just take the depreciation. So we have discussed all of these things very much detail. Yeah, and then work in progress also, work certified, work uncertified. Yeah, and then what did we say for the contract account? Whatever you put into the contract, you have to take it on the debit side. Yeah, it seems like nominal profit and loss account. Yeah, whatever you put into the contract, you have to take it over here, and whatever comes out of the contract, the income and the closing stocks, you have to take it on the credit side. But then regarding the profit or loss, there is a small difference between the new syllabus and the old syllabus. Yeah, for the loss, if you have a loss on the contract, balancing figure on the credit side, then for old syllabus as well as new syllabus, it's same. Yeah, by profit and loss, by costing profit and loss on contract, you can take it over here. But if there is a balancing figure on the debit side, if there is a profit, then there is a difference. Yeah, see here the chart properly. Where is that? See here, balancing figure. If there is a loss, take it on credit side, by profit and loss, game over. But if there is a profit, what you have to do, if you have got NIV syllabus, yeah, if you're a CA Inter student, then what you have to do, you have to take it on the debit side to costing profit and loss. It's very easy for you guys, for CA Inter guys. But for the IPCC students and for the graduation courses, what happens, you people have to split that profit into two, into costing profit and loss and WIP reserve. So how you have to do that, you have to understand that properly. So please watch the video. Yeah, see here in the format properly. To notional profit you have to take, carry it down, and then take it over here, brought down, and then you have to split that. Yeah, you have to do some calculation to see how much you have to take to costing profit and loss, and then whatever the balance is there, that would go to WIP reserve. Yeah, that's what we saw, isn't it? So see here, how much amount to be taken to profit and loss. What you have to do, you have to find degree of completion, work certified over contract price into 100, you will get a percentage, and then you have to use this chart properly. Yeah, and use the formulas. Yeah, wherever your percentage falls, that formula you have to use, and you have to transfer that much amount to the profit and loss, and the remaining would go to where? The remaining would go to WIP reserve, isn't it? Yeah, whatever goes in the profit and loss, the remaining would go to WIP reserve. Fine. So these are the formulas we have. Yeah, so please watch the previous video to understand this properly. And then we discuss the contractee account. Yeah, the contractee account, isn't it? We are receiving the money, so cash account debit to contractee account, and then at the end of the year, what will happen? When the contract finishes, you have to transfer whatever balance that is there in the contractee account to the contract account. All right, so that's what we discussed. Yeah, and you will receive the payment in installments every year, little by little. Yeah, and then we also saw the balance sheet extract, what you have to take into the balance sheet extract, all the assets you have to take, plants, materials at site, at store also, and then you also have to take WIP over here. Yeah, because you haven't finished the entire work, isn't it? And you have also not got the money for the entire thing. See here, work certified is the completely done properly, and it has been approved by the architect. Yeah, work uncertified means not approved work. Yeah, so you have to take both of those things, and whatever WIP reserve is there, you have to subtract that, and whatever amount you receive from the client, that also you have to subtract. The remaining would be your asset. Yeah, because you have done the work and you are yet to get the money for that, right? Yes, and then you have to take here the updated profit and loss balance and all the outstanding expenses. Mainly there will be outstanding expenses, wages and all, so it will come over here because that's liability, right? Yeah, so this is what we discussed so far. Now let's get back to the problem. Let's solve this problem properly. Yeah, and let's understand how to solve a problem of contract costing. Now here we have the question. Let's go through it once. Let's try to understand what is happening over here. So see here, ABC Contractors Limited were engaged on one contract during the year. The contract price was rupees 40 lakh. The trial balance extracted from their books as on 31st March stood as follows. So here we have trial balance over here, isn't it? See here, the whole trial balance is given and it tallies 24 lakh 80, 24 lakh 80. That's what happens, right? All the debit balances are equal to credit balances. So if the entire trial balance is given, then we would be able to prepare the whole balance sheet properly and it will tally. But mostly the trial balances will not be given. Yeah, so what you will have to do is you will have to just prepare the balance sheet extract. But since here the entire trial balance is given, so we would be able to prepare the whole balance sheet and get it tallied. Fine. Okay, so this is what share capital, creditors, land and buildings, bank. See here. Yeah. Then what contract account they have given as the materials, plant, wages, expenses, all these things that have been put into the contract this year. And then what here they have given us cash received being 80% of work certified. I've told you regarding this, right? Whenever work certified in every year, whenever the work certified, just for an example, let's say 1 lakh is the work certified in this year. So now what the contractor will do, will the contractor will pay us the entire money? No, even though 1 lakh is work certified and it is approved by the architect, yeah, still the contractor will not pay us the entire money. What he will do is he will pay us a percentage of that. Just for an example, 80%, so 0.80, that's equal to 80,000. So he will pay us 80,000 and the remaining 20,000 he will not pay us, because that's the retention money. He will retain it with himself. Yeah, it will be agreed in the contract like that. Okay, the entire payment will not be done in one go. Yeah, if 1 lakh is work certified, the contractor will not pay us 1 lakh, 80%, 90% of that, right? Yeah, you get that. So we have this cash received being 80% of work certified, so we can easily calculate work certified. This is not work certified, this is the money we received. Okay, so what we have to do, we have to round it up. Okay, what we have to do, simple, 16 lakh is the money we received, yeah, and this is 80% of work certified. So what you're going to do, we need 100%, yeah, divided by 80 into 100 divided by 80, you will get 20 lakh as the work certified. Simple as that. So that's how you will calculate the work certified. Okay, it's not a big thing, it's a very simple thing. Yeah, then what, plant costing rupees 30,000 and materials costing rupees 24,000 was destroyed by an accident. Now what is this? This is abnormal loss. Where do we have to take the abnormal loss? We have to take it on the credit side of contract account. Yeah, because when we put something into the contract, it comes on the debit side. Now here what is happening, these things are like going out. Yeah, think properly, think from this logic. When you put something into the contract, it will come on the debit side. Yeah, let me just show you. See here, when you put something into the contract, it will come over here. Yeah, expense, all these things, materials, plant, whatever you put into the contract will come over here. But then whatever you get out of the contract, whatever that goes out of the contract will come over here. Now here we have got abnormal loss, plant costing rupees 30,000 and materials costing 24,000. Now for the abnormal losses, what we do, yeah, see, if the exact date is given, then what we have to do, we have to take written down value of the plant. Yeah, plant costing 30, this is the cost. But when we lose something after 3 months, 4 months, 5 months like that, then what you have to do, you have to deduct the depreciation and then take it in the contract account. All right, but here the date is not given, so we cannot calculate the depreciation or anything. So what we are going to do is we are going to take only the cost over here in this problem. But in many problems, what happens, you have to deduct the depreciation of the plant and then take the written down value, the depreciated value over here. Okay, you have to value the abnormal loss properly. Is that clear? So that's what we have to do. So see here, let's solve this. See here, the first thing that you are going to do is you are going to take all the expenses and the materials and the plant, whatever you have put into the contract. So material 7,50,000, plant 2 lakh, wages 10,50,000, expenses 50,000. All of these things will come where? These will come on the debit side of contract account. Yeah, 2 materials, 2 plant, 2 wages, 2 expenses. Right? Simple. Yeah. And then as I said, the abnormal losses will come on where? It will come on the credit side. So by costing profit and loss account, plant destroyed 30,000, materials destroyed 24,000. Yeah, I told you, if the date is exactly given, then you can easily calculate the depreciation of the plant on that 30,000 and deduct that and take the written down value. But here, since the date of that abnormal loss is not given, so we assume that it happened in the beginning itself and we don't take the written down value over here. I mean, I have not taken it over here, right? Yeah, so there's that. Yeah, then what? Then they are saying on 31st March, plant which cost rupees 40,000 was returned to the store. The value of the materials on site was 30,000 and the cost of the work done but not certified was 20,000. So here they have given us the closing balances over here. As you can see properly, plant which cost 40,000 was returned to the store. Now whatever comes out of the contract, it is coming out at the end of the year. We know that exactly, it is coming out at the end of the year. So what you have to do, you have to take the written down value, depreciated value. Plant is being returned to store, but is it returning to the store at cost? No, it is returning to the store at depreciated value, at the carrying value after deducting the depreciation. That's what you have to calculate. What's its carrying value, right? So how will you do that? Simple. They have said over here 40,000 cost of plant has been returned to the store, right? See here, 40,000 is the cost of the plant that has been returned to the store, right? But then let's see what's the depreciation. See here, charge 10% depreciation on plant. So that's what you have to do. Yeah, 40,000, right? So 10% you have to depreciate. That means you have to take only 90%, isn't it? If this is 40,000, this is the cost, and you need depreciated value. Yeah, so you have to deduct 10% from that, isn't it? See, 40,000 into 10, that's 4,000, and then you have to subtract that from the cost. You will get the carrying value, the return done value. Yeah, so simply what you can do into 0.90. Yeah, you will get the same thing. Yeah, I took 90% of 40,000, I got 36,000. That's my carrying value. So that's what you have to take it over here, 36,000. Is that clear? Or you can do it like this in a conventional way. Fine, you get that. Then what? Then they are saying, see here, the value of materials on site was 30,000. Now this you will not have to depreciate. Come on. Yeah, this is your inventory, right? So see here, plant at site. Sorry, not plant at site. Materials on site, right? Materials at site. See here, materials at site 30,000. Yeah. What does it mean is materials at site? Yeah, it is the closing stock of the materials. So that's why you have to take it over here. Okay. And it's not being returned to the store, it is at the site only, but still it's a closing stock, so you have to take it on the credit side. Is that clear? Yeah, so materials at site 30,000. Fine. Then what? And the cost of the work done but not certified, I will see that later. Then what do we have? Yeah, then what we have to do is, see here, the plant which we put into the contract was of 2 lakh, isn't it? The plant which you put into the contract was of 2 lakh, and then 40,000 cost of plant was returned to the store. Then what happened to the remaining? See here, 2 lakh plant you sent into the contract. Yeah, and then abnormal loss happened also, right? Here 30,000 abnormal loss of the plant happened, so minus 30,000. Yeah, then 170 is left in the contract. But then what happened? Yeah, see, plant returned to the store. How much? 40,000 cost of plant was returned to the store, so minus 40,000. So 130 plant. Yeah, 130 cost of plant, 1,30,000 cost of the plant. Where is that? That's at the site itself. That's the closing stock. That's at the site itself. Yeah, it has not been returned to the store. It is in the site itself. It is not said in the question, but you have to see that. It's common sense, isn't it? 2 lakh plant you have brought into the contract, 30,000 destroyed, 40,000 has been returned to the store. So where is the remaining one? The remaining is at the site itself. So that's what you have to do. So see, the calculation is simple. 130 cost. Do you understand how did I get this 130? Yeah, 2 lakh minus 30,000 minus 40,000 cost. Yeah, so 130 is the cost. Yeah, 130 is the cost. So now from this cost you have to deduct the depreciation and take it in the credit side. Yeah, by plant at site. So how will you remove the depreciation? Now we know 10% is the straight line depreciation over here. So what you will do? Same thing, 130,000 into 90% into 0.90. You will get the written down value as 1,17,000. You can either do this way or the conventional way. 1,30,000 is the cost of the plant at site into 10%, 13,000. 1,30,000 minus 13,000, that's equal to 1,17,000. Or do this shortcut. Yeah, right. So this is what you have to do. So plant at site, the closing stock, and then what? And then we have work in progress. Yeah. So how will you take work in progress? You all know that we have to split the work in progress into work certified and work uncertified. Why is that? Because work certified is valued at what? It is valued at contract price, and work uncertified is valued at cost price. Yeah, it's valued at cost price. So don't worry, it will be given to you directly in the question. Mostly it is given. Yeah, you just have to take them. But here, what has happened? Here they have given you the not certified. Yeah, see here, work done but not certified was 20,000. So you can take that directly, 20,000. Work uncertified, 20,000. Right? Work certified, is it given? It's not given. Work certified is not given in the question anyway. But if you see over here, as I told you in the beginning itself, that cash received being 80% of work certified is given over here, isn't it? As you can see over here clearly. So you have to just round it up. Yeah, see here, 16 lakh, right? Cash received, but cash received being 80% of work certified, that's 16 lakh into, we need 100% of that. This is 80%. We need 100% of work certified. So into 100 divided by 80. Is that clear? So you just have to multiply with the reciprocal. You will get the entire figure, 20 lakh. Yeah, so 20 lakh is what? 20 lakh is the work certified. Did you get that? Simple. Yeah, so that's how you have to calculate the work certified. Yeah, see here, 80% of work certified is 16 lakh. What you have to do? 16 lakh into 100 by 80. Yeah, this is 80%. We need 100. 16 lakh into 100 divided by 80. That's your 20 lakh work certified, the entire figure. Right. So almost everything is over. This is an easy question. Yeah. So now what we have to do, see here, everything is done. The expenses, materials, plant, whatever you have put into the contract, whatever that came out of the contract, yeah, materials going out of the contract, plant going out of the contract, and then this is a closing stock, return to store, at site, work in progress also over. Yeah, this is our main income, right? Yeah, that's also over. Now what you have to do, now you have to find out the balancing figure. Now the balancing figure comes on the debit side. See here, let's put that into calculator properly. See here, 54,000, yeah, see here on the credit 54,000, yeah, plus 36,000 plus 30,000 plus 1,17,000 plus 20,20,000, that's equal to 22,57,000, right? Then go on subtracting from the debit side, 7,50,000 and all these things, yeah, minus 7,50,000 minus 2 lakh minus 10,50,000, sorry, 10,50,000 minus 50,000, that's equal to 2,07,000, right? 2,07,000. So 2,07,000 is our balancing figure. Now the difference between the new syllabus and the old syllabus. For the new syllabus students, it's very simple for you. Just take two costing, profit and loss, all the CA inter students, right? Simple, game over. But for the BCOM, BBA and the IPC students, for the old syllabus, for the graduation courses and all, what you have to do, you have to split that. You have to take it as notional profit to notional profit, and just a rough profit to notional profit, carry it down 2,07,000, yeah, and then bring it down over here, brought down by notional profit, brought down 2,07,000, and then you have to split it. Yeah, you have to see a small calculation here. See, it's very simple. Yeah, so till here it's over, right? To notional profit by notional profit. Yeah, then what you have to do is, yeah, you have to find out the degree of completion. See this calculation over here. Degree of completion formula is work certified over contract price into 100. Yeah, we know work certified is 20 lakh and contract price is given in the question 40 lakh. So 20 by 40 into 100, that's 50%, isn't it? See here, 20 divided by 40 into 100, 20 divided by 40 into 100, that's equal to 50%. Yeah, 50%. So that's what 50%. So now use the chart. Where is that chart? See here, greater than equal to 50%. Yeah, in the third category it falls. So what kind of formula you have to use? 2 by 3 formula. Yeah, notional profit into 2 by 3 into cash received over work certified, right? If you use this formula, then you will get how much amount you have to take to profit and loss, right? So that's what, use the chart, amount credited to profit and loss account, notional profit into 2 by 3 into cash received over work certified. So notional profit is 2,07,000. So 2,07,000 into 2 by 3, yeah, 2 divided by 3 into, then 16 lakh divided by 20 lakh. So can I not take 16 by 20? Of course I can, right? So into 16 divided by 20, that's equal to 1,10,400. So 1,10,400 would go to where? It will go to profit and loss. Is that clear? So it will go to profit and loss, and then whatever balancing figure is there, that would go to WIP reserve. Yeah, costing profit and loss 1,10,400. So see, I have taken that over here, and then I will subtract it from the notional profit. Yeah, so that the balancing figure I can find it out. So minus notional profit 2,07,000, that's equal to 96,600. So 96,600 would go to WIP reserve as the balancing figure. Now this WIP reserve has to be taken to where? To balance sheet. Yeah, you have to subtract that. Now let's see the balance sheet. Yeah, let's see the balance sheet and let's try to understand what we have to do in the balance sheet. You understood all these things, right? It's very simple. Abnormal loss, whatever that the plant has been returned to the store at, or that has been at the site, what you have to do for that? Calculate the written down value. Yeah, that's how you have to do this. Whatever you have put into the contract, whatever that has come out of the contract, the income and the closing stocks and the losses, abnormal losses I mean. Yeah, and then if you sell anything, we'll see that in some other problem, in the second problem and all. Yeah, if you sell, then you also have to recognize profit or loss. Okay, so we'll see that, don't worry. Yeah, and for the new syllabus and the old syllabus, there is a small difference. Yeah, that you have to be very careful about. Yeah, and for the new syllabus students also, you have to understand this properly. Okay, because if you're doing any graduation courses such as BCOM or anything, then there also it's done like old syllabus only. Yeah, notional profit, split it into 2 and all that, right? So this is how you have to do it. It's very simple, it's not tough. Yeah, very simple, very easy. So now let's go to the balance sheet. Yeah, let's go to the balance sheet. Now here we have the balance sheet. See how simple it is to prepare this. The first thing that you have to do is first see the trial balance, because from the trial balance you can directly pick up some items, isn't it? Share capital, creditors, land and buildings, bank balance, all these items you can directly take them without no changes. So share capital 8 lakh, creditors 80,000, then you have profit and loss balance over here. Now here you have to make some changes, isn't it? What is the profit for the current year in contract account? See, that's different, right, for the new syllabus and the old syllabus students. For the new syllabus student, you can directly take 2,07,000. Yeah, I mean, you have to make the changes in the profit for the new syllabus, for the old syllabus students also. Yeah, so see here, regarding the profit and loss, what will happen? This is the profit that you have made for the new syllabus students, but you have to subtract whatever the losses you have incurred over here, such as abnormal losses, or what do you say, loss on sale of plant and material and all these things. So here this 54,000 has to be subtracted. 54,000. Okay, whichever profit you take from that, you have to subtract 54,000. Okay, so let's come to the old syllabus students. For the old syllabus student, the profit is how much? 1,10,400, isn't it? The profit is 1,10,400. Yeah, isn't it this much? So minus 54,000. Yeah, this is 56,400. This is the profit for the old syllabus students and the BCOM and all. Yeah, but for the new syllabus student, what is the profit? For the new syllabus student, the profit is 2,07,000 minus 54,000, the loss which you have made over here, right? The abnormal loss. Yeah, so 54,000 you have to subtract that. 153,000 you have to take it over here for the new syllabus students. Is that clear? Yeah, that's clear, right? Simple. Yeah, and then what? Land and building, directly from the trial balance, land and building. Yeah, and then plant. Now for the plant, yeah, see, these are assets, right? The closing balances of plant returned to store, and plant at site. Yeah, these are the two items that will be taken to the balance sheet, not this. Yeah, because this is the opening balance. The opening balances are not taken to the balance sheet, the closing balances. Yeah, and that too depreciated value. Now we have already done the calculation and everything, so we don't have to worry about anything. Just take the closing balances, 36,000 plus 1,17,000. Yeah, because this is what we have at the end of the year. At the end of the year, whatever we have on 31st March, yeah, balance sheet on 31st March, at the end whatever we have to show that in the balance sheet. So 36,000 plus 1,17,000 would be our plant balance. Yeah, 36,000 plus 1,17,000, that's equal to 153. See here, 36,000 plus 1,17,000, that's equal to 153. So 1,53,000 is our plant balance. And then we have materials at site. See here, materials at site. Now this is also our asset, right? Isn't it? So 30,000 you have to take that over here. Materials at site, 30,000. Simple. Yeah, yes. Then what? Then you have to take WIP. Yeah, work in progress. So in work in progress, what you have to do, you have to take work certified, uncertified, 20 lakh to 20,000. Yeah, it's there, 20 lakh, 20,000. Take that. Then you have to subtract, for the old syllabus student, you have to subtract WIP reserve also, because you will have WIP reserve, right? WIP reserve for the old syllabus and the BCOM guys, you have to subtract that WIP reserve. But for the new syllabus, you will not have this, isn't it? Yeah, so that's the difference. That's the only difference. Yeah, so you have to subtract that. And then cash received also you have to subtract. For the new syllabus as well as the old syllabus students, both the people have to subtract cash received, whatever cash you have received in advance. Yeah, what's that? 16 lakh, isn't it? This one, 16 lakh, isn't it? This is like your liability. Why is it like your liability? Because you have not completed the contract, the whole contract. Yeah, if you don't complete the contract, then you might have to return this money. Yeah, so that's why this cash received is like advance. It is supposed to come over here, but we can also take it over here by taking it in minus. Is that clear? So cash received in advance, 16 lakh. So the net WIP is our 3,23,400. So this is what, this is the work we have done, and we have not got money for that. Yeah, so this is our asset. We are supposed to receive money on this much work which we have done. Is that clear? Yeah. And then bank balance, which was given directly into the trial balance, 90,000, that I have taken at the below. Yeah, bank account 90,000. Simple. So this is what, so then it tallies. Yeah, so see here, 3,40,000 plus 153 plus 30,000 plus 323,400 plus 90,000, that's equal to 9,36,400. And then come to this side, 8 lakh plus 56,400 plus 80,000, that's equal to 9,36,400. So it tallies. Yeah, so this is how you have to do it. Okay, for the new syllabus and the old syllabus students, you have to be very careful. Okay, for the new syllabus student, you don't have WIP reserve. Yeah, here also there is a change. You will directly take that costing entire profit and loss, and whatever the loss or anything that has been happened in the contract account in that year, you have to subtract that. Is that clear? So you will get the updated profit and loss account. For the old syllabus students, what you have to do, you have to take this one. yeah, the below one, this profit, and then make the changes from here, right? So that's what you have to do. And for the old syllabus and the BCOM guys, you also have to deduct the WIP reserve. Fine. Now here in this question, what happened? In this question, they didn't ask for the whole contract. No, what they asked was prepare contract account balance sheet as on 31st March, only of 1 year they asked. That's why we had to prepare only one contract year of one particular year and then the balance sheet of one particular year. Now what happens mostly in many questions, what they ask you is to prepare many contract account, okay, for 2015, 2016, 2017, like that, yeah, okay. So that's what you have to do, right? So we'll solve one more problem in the next video, and we'll see how to solve that kind of problems, okay, long problems. Is that clear? So from this you can understand the basic idea and the concept properly. You can understand many things from here, isn't it? Yes. All right, easy, right? So this is how you have to do it. It's not tough, it's very simple. Yeah, all written down values over here, yeah, whatever you have put into the contract, whatever that has got out of the contract, and the difference between the old syllabus and the new syllabus, you have to understand that properly. Yeah, that's all, yeah, easy. Okay, then see you in the next video, yeah, in the problem 2.